Craig Stobo joins us usually at this time, and you're there. Craig, welcome to the show, mate. How are you?
Thank you. Very well, thanks. How are you? Good?
I am brilliant. And at 10 o'clock this morning, the Treasury published the government's interim financial statements. I guess you know that. And these show that net core Crown debt is now $182 billion, which is a roughly 43% of GDP, which is $2.1 billion lower than forecast, largely due to foreign exchange movements, but that still seems an awful lot of money. Gross debt is $206 billion, which is 48% of GDP, which is $500 million higher than forecast. And it's forecast to rise another $500 million by June the 30th. Against all of that, Nicola Willis, the Minister of Finance, has got to make a budget. How do you think she'll do it, mate?
Yeah, I think worthwhile posing the question, isn't it? Which is, how do you square the circle? So let's just provide some context. So the deficit, the government deficit, excluding ACC, is worsening from 9 last year to $13 billion this year. And as you mentioned, government debt is rising. I think you mentioned 180 odd from this morning's announcement, but last year's number was 175 billion, rising to $193 billion this year. That was forecast at the end of last year. The scary thing is, if you keep going out further, the debt number becomes much larger, $230 billion in 2029. So I want to sow the seed of a kind of a debt spiral in here with listeners, that this needs to be checked. And the debt to GDP ratio, you're right, it's rising from 42 to roughly 45% forecast this year, as at the 6 monthlies in December. And our interest bill is $9 billion. We're issuing roughly $20 billion of new debt, new government debt in 2025. So that's about roughly $500 million every week we're borrowing to cope with rollovers and new debt. It's a lot of money heading out the door coming in the door that we need to raise. So Nicola's speech of a week or two ago, Minister Willis's speech, she's still aiming for a small surplus in 2029. She's promised increased spending in this budget on the 22nd of May in health, education, law and order. We know about defence, some help with business growth and cost of living relief. So you have a commitment to a surplus way out, 2029, and you're still trying to increase spending with taxpayers' money. And that's why what's called an operating allowance number, which is the net new spending this year, she's flagged, will reduce from $2.4 billion to $1.3 billion. So there's still net new spending going on. We're not actually tightening our belts, actually. We still have an operating allowance that's increasing expenditure. So how do you square the circle? Well, the strategy seems to be go for growth. So the investment summit to try and bring in new overseas investment or domestic investment into projects, make sure New Zealand's on the map with everyone around the world who's got equity or debt that they wish to invest, and grow our way out of this problem. The issue right now, of course, is the uncertainty with Trump, and what that means for investment confidence in the marketplace. And underneath that, is there still an issue around we're still slowing as an economy? We're still bumping along the bottom of GDP growth, with unemployment at 5.1%. You might want to look at the RBNZ website on latest interest rates, just so everyone understands. They do a survey, and the ones in April, the floating mortgage rate's still at 6.67, which is still pretty high. And business, that is small, medium-sized enterprise interest rates, are 11.15%. It's a
Wow.
lot of money to borrow for
Yeah.
SMEs.
Yeah.
So you might think we can cut the OCR a little bit more because the economy's, sluggish, but doesn't necessarily translate through into attractive borrowing rates. And you
Can
might
I
not have
just go?
noticed,
Can
but
I just go back one on the operating deficit? So what you're saying is, compared to its, because you know me, I'm a simple dude, studied
yeah,
history, didn't study economics, Craig. You're saying that this year we're still going to be spending more money than we're earning. we're going to borrow to breach that deficit, but that we are going to continue until 2029 borrowing to make the difference between government income and government expenditure. Is that correct? And therefore increasing the debt.
Yeah, so the small surplus mentioned by Minister Willis last week or so is still expected by her in 2029. Until then, until we square the books, we'll need to borrow to fund the difference. You're right.
But this isn't making investments in infrastructure or anything like that, Craig, as we are being urged by some economic quarters, particularly on the left side of the spectrum. This is just upon doing the stuff that we normally do, like every day.
Correct. That's right. So that operating allowance, my point is twofold. One is we've got a debt spiral that's an issue if we don't keep it in check, and that's the interest rate costs of that as well. And the net new spending is not coming back to zero. We're still net spending new money. It's not $2.4 billion, it's $1.3 billion, but it's not coming back the other way to zero. So we've got a very iterative process of trying to slowly change things, not trying to make radical changes, but it doesn't really address the problem of this debt that's increasing. So in the budget, how do you square the circle between promising expenditure on all those items, which must be relatively small increases, unless you increase taxes? And I can't see this coalition increasing taxes.
No.
So there must be more expenditure cuts elsewhere that are not included, that are not affecting those expenditure votes, those departments that I mentioned before. So is it dropping corporate subsidies? Is it dropping the subsidy in KiwiSaver? What can they look at to reduce expenditure elsewhere?
Yeah.
So it's got to come somewhere else. The rate of change of sorry, after you.
No. I was just thinking as you're saying that though. So I know the analysis you're giving is spot on, and on one side you've got the taxpayers union with their sort of debt graph growing every day, spreading alarm on that side. On the other side you've got the Council of Trade Unions saying now is not the time for austerity, because if you start to retrench, then it's the old Keynesian argument that you make things worse, not better. You need to be spending in times and investing in times, particularly in infrastructure, etc., etc. Where do you err on that argument, Craig?
Well, I think it's sort of depends, but it's always about the starting point. So we're in a relatively worse position than we were in 2017 with all of those numbers. So We're starting from a relatively poor position. In a country that is subject to natural disasters, you need debt capacity to be able to cope with those, and we've got less of that as that debt to GDP worsens. I think the second point is who delivers that investment. Does it have to be the government? And I think what the coalition is flagging is that they would like the private sector to take a greater role in these in these investment opportunities. It won't be in this budget because the coalition doesn't mention asset recycling, but I think it would be wise for the coalition and for the electorate to think more carefully around recycling capital that the Crown owns. So do we need to own 51% of our power companies? Do we need to own Air New Zealand? All the assets that are on the government books, can they be more productive, or can they, as they stand, or would they be even more productive in 100% private hands? These assets aren't going to go away. The dams still remain on the Waitaki and on the Waikato. It's just, can they be operated more efficiently? So I think that's one angle, is can we think more carefully around how we manage our assets, and I don't necessarily think that the Crown's the best owner. So that's the first point. I just want to raise one other thing.
I mean, you're not going to get away with that easily, Craig. Listen, the corporate model's not working, though, is it? I mean, we're watching electricity prices go through the roof. We've seen all investment, really. There's no new dams been built since Clyde. No electric dams been built since Clyde. Contact Energy got done 3 years ago for just down the road from me, releasing water that was stored up so they could drive up electricity prices. I don't have an awful lot of confidence in already not very responsible electricity market being owned completely by the private sector. Or you're saying, well, it wouldn't matter, Michael, if they were owned by the public or the private sector, they'd still act in this rapacious way. Does it make it easier for the government to regulate if they don't own something, do you think, Craig?
Well, you hit on the answer that I was going to give you, which is the government is an owner, a player and a referee, to use a sporting analogy. They set the regulations and they own some of the assets. And they look forward to dividends every year from these assets, which might, in a different set of hands, be deployed into investment to grow the business as opposed to an income producer. So I'll give you the challenge back. I think the government needs to be a much better regulator, which means efficient, transparent, fair regulation, and doesn't have to own these assets, but we can regulate them in an efficient way. So I'd push the challenge back to you.
No, you're not going to get an argument from me. It's just that I want to make sure that we've got a more efficient regulator than the Commerce Commission and its wet bus ticket mentality, Craig.
Yeah, or the other entities that are involved in the oversight of that marketplace.
Exactly.
Yeah, well, I didn't finish the conversation about this a couple of weeks ago, and I apologise to you and your readers, but there is a review of the Commerce Commission being led by Dame Paula Rebstock around the efficacy of the Commission, its work, its governance, and its kind of role, and whether that needs to change. So I don't quite know when that report's out. It may well be before the end of June, but there is a review going on, which I'm looking forward to hearing from what that means for the Commerce Commission.